Hi, and welcome to this short video on a sell trade for the 16th of December 2013. Just before we start, we are in the run down towards the Christmas holidays, so you are going to find that the markets are going to be fairly quiet and in a sideways trading range. When this happens, of course, it makes it a lot more difficult to trade because we need the volatility in order to collect the points. So on the 16th, we can see that we had a sell signal and the order was filled. And unlike normal, what I decided to do on this day was to wait and see if the market rallied back first, because we'd not had much activity at all. We've been coming off the closed DP there. Market had traded up, then it came back, and then we'd had a run up to the R1 level, and then the market was coming back to the downside. Notice that we have a major psychological level here. We have the DP and we have the clothesline. And when I looked at this, I thought what I will actually do here is allow the market to move back first, show some more weakness, and then sell back into it in the hope that the market would actually move lower. So that was the strategy. Plus I could actually reduce the 33-point risk as well. So what I did was watch the market for a while. You can see prices moving higher there, and then we have the green bar there, not on too much volume. It is higher than the average, and then this bar trying to move high as well back towards the stop. So at this point I'm not in the market, I'm just waiting and watching to see what it's actually doing, see if it can come back up towards this area here, and then I could take the risk of actually going short with a lot less risk. Instead of having 33, around 16 to 10 pips there. So I'm waiting and watching, looking for a red candle or some sort of weakness to come into the market. So here we can see the market traded up nearly to the stop level and came off the highs and then moved back towards the middle of the trading range there. So you will see me now move down to a smaller time frame. I'm just having a look in the side of the 1 minute chart, and there's no great selling around or buying come to it in this area. We saw the market sell off a bit here and then move higher, and then it's come back and is now starting to move lower. So I've taken the decision now. I'm far enough away from the 163 and the DP area to actually sell the market. So I've just sold into the market. I've gone back to the 30-minute chart, and you can see now the market moving through the DP area, and we're now stuck at the psychological area. We've gone through that as well, and we're also through the original entry point. Again, because of the support to the left-hand side, it's late on in the afternoon. I decided that having now managed to acquire 20 pips plus 21.2, that I would close out the trade, because this support area and the close DP, the market is finding it very difficult to move lower. And also, as I said at the opening of this, we do have the Christmas holidays coming up as well, and the markets are going to start trading quieter. Although on Wednesday, which is going to be the 18th, we will see some sort of activity. The Fed are making an announcement as far as I'm aware. We'll just check that in a moment though. So there you can see me closing out the trade, and for 20 pips on what would have been a break-even trade, just by watching the market come back. So just to recap here, the reason for changing the approach on this one, which I wouldn't normally do, is that there was so much support here. You can see where the buying came into the market here with the green volume, prices moving higher up to the DP. The buying sort of dropped off, and we had a red bar at the top here. The market came back. We saw a lot more volume here. You can see it's not highlighted, but we have two very high volume bars. So the market's finding support here and then moves back up and then comes back through, and again the volume's dropped off now, so the traders have more or less called it a day. So that's the rationale behind that. Let's have a look and see what happened after. I'm just going to go to the 30-minute chart. This is yesterday afternoon, And you can see there, that's where the market came down. This is where we took the profits, and that was more or less about the low that we've got. And again, my judgment and assessment of the support that we saw is still prevailing in the market, and on the overnight the prices have traded back up towards the original stop there and above the DP line as well. Some selling coming into the market now, but it is early in the morning. It's only 6:53 there. Okay, that's it for now, but do keep in mind that we are heading towards the Christmas trading season, which can be quiet. And also, let's just have a look, see if there is any news out tomorrow that could assist with creating a bit of volatility over the next few days. Let me just bring this window in so you can see. Let's have a look for tomorrow. Let's have a look for today as well. We've got CPI today, which is useful. Bank of England governor speaking later on today as well, so it's interesting to see what Carney's got to say. Let's have a look at the 18th. I'm sure, yes, there's the FOMC economic projections and FOMC statement tomorrow, and we still have unemployment figures as they used to be known, now claimant account change for tomorrow as well. So we should have a bit of activity, but like I say, keep in mind we can expect the markets to be fairly range bound as we go towards the Christmas period, which is a week tomorrow for the official Christmas day. But the run up to it, and especially as we get towards Friday, expect the markets to be fairly quiet unless something geopolitical takes place. That's it for now. As ever, thanks for watching. I will see you in the next one.